Hello and welcome to Naseems Accountants. With a new tax year approaching, a number of personal tax changes will take effect from April 2026. While many people may not notice a major difference immediately, there are several important areas worth being aware of. Here's a summary of the key changes for 2026-27. Dividend tax rises. From April 2026, dividend tax rates are increasing. The basic rate will rise to 10.75%. The higher rate will rise to 35.75%. The additional rate will remain at 39.35%. Many company owners take income through a mix of salary and dividends. If that applies to you, it may be sensible to review how you draw income and whether your current balance remains tax efficient. Thresholds remain frozen. The tax-free personal allowance and income tax thresholds remain frozen and are set to stay frozen until 2030-31. This ongoing freeze continues to pull more people into higher rates of tax over time. For Scottish taxpayers, there will be an increase to the basic and intermediate rate thresholds, meaning lower earners may see a small increase in take-home pay. However, due to fiscal drag, higher earners may increasingly find themselves paying more tax. National insurance and voluntary contributions. If you have gaps in your national insurance record, are self-employed with low profits, or have worked overseas, you may have considered voluntary contributions. From the 6th of April 2026, Class 2 NICs will increase from £3.50 to £3.65. Voluntary Class 3 NICs will increase from £17.75 to £18.40. In addition to the rate increases, voluntary Class 2 NICs will no longer be available for periods spent abroad. Voluntary Class 3 contributions will still be possible, but the qualifying criteria have been tightened. Capital Gains Tax, CGT. Business owners planning to sell or restructure should be aware of changes to capital gains tax. For 2026-27, gains qualifying for business asset disposal relief or investors' relief will be taxed at 18%, up from 14% in 2025-26. Reliefs for disposals to employee ownership trusts have been scaled back, and the rules for share reorganizations have been tightened. These changes are already in force. If you are considering succession planning or restructuring, timing and planning remain crucial. Inheritance tax APR and BPR changes. From the 6th of April 2026, changes to inheritance tax will affect agricultural property relief and business property relief. Previously, these reliefs were unlimited. From April 2026, 100% relief will be capped at £2.5 million of combined agricultural and business assets. Above this threshold, relief reduces to 50%. Unused amounts can be transferred to a spouse or civil partner. Although the £2.5 million limit is higher than originally proposed, those who may be affected may wish to review their estate planning arrangements. These changes will not affect everyone. However, if you are impacted by any of these developments for 2026-27, early planning can make a significant difference. If you would like support reviewing your personal tax position, dividend strategy, business disposal plans, or estate arrangements, book your free consultation with Naseems Accountants today on 01217714161 or visit naseems.co.uk. We would be happy to help you plan ahead with confidence. If you found this video useful, please like, subscribe Naseems Accountants.